Hello everyone, I'm Miruna Ivan. I am a PhD student in finance at the University of Essex, and jointly with Chiara Banti and Neil Kellert, I would like to present you our research on prime money market funds regulation, global liquidity, and the crude oil market. In 2016, a set of regulatory reforms for prime money market funds were introduced to address the vulnerabilities which resurfaced during the global financial crisis, according to which prime money market funds were required to adopt a floating net asset value structure, liquidity fees, and redemption gates in the event of a large increase in outflows. This regulatory reform led to higher short-term dollar borrowing costs. We can see a decline in the prime money market funds investment holdings in 2016. The expansion of debt in the oil sector in the post-global financial crisis period makes oil companies particularly susceptible to sudden disruptions in the global funding market. Oil companies have borrowed heavily in US dollars from both banks and in the bond markets, with the issuance of debt securities far outpacing the overall issuance of other commodity sectors. We propose two channels through which disruptions in short-term funding of prime money market funds can be transmitted to all companies: an indirect channel through cross-border bank flows and a direct channel through prime money market funds. We find that global liquidity matters for the global crude oil market. Tighter dollar funding conditions driven by the 2016 US prime money market funds regulatory reform have a lagged negative effect on the real price of crude oil and a positive effect on crude oil production and oil inventories. We find that the effects are driven primarily by a fall in certificates of deposits. We also find that the US nominal effective exchange rate acts as a transmission channel for the negative funding shock to the real price of oil. Thank you for listening.